The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the April 8th terrific Tuesday, of course, a.k.a. Turnaround Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call the 4 rules of decision making. Rule number 1, and this is really important, folks. Rule number 1, all important or difficult decisions must, I don't use that word too often, but they must be made on paper. Let me say that again. All, and I mean all important or difficult decisions must be made on paper. That means don't do it in your head, because when we try to do it in our head, we usually end up in what I call a loop. I don't know if you've ever done this before, but I certainly have. Or I should say, I used to do this. I start off by saying to myself, hey, that's a good idea. But then I'd add to that, well, what if this happens? And then I'd say to myself, but what if I do this instead? If that's not bad enough, you start to think about other alternatives. And then you say to yourself, but what if this happens? And you go back to the first option. And then that's how we end up in what I call this loop. And it goes over and over and over. And we end up with no resolution whatsoever. So I don't know if you've ever done that. But when it comes to your trading and investing, I'd ask this question, have you ever done that? You know the expression, it's used often in the den. Our man Z posts it all the time. Plan your trades and trade your plan out there. You see, folks, the worst thing about looping is that it adds stress and pressure. Forget about the fact that we don't solve the problem out there. So if you got problems in your life, put them down on paper. And no question that trading and investing decisions, they're important, they're difficult. That's why I always write them down on paper, and I think you should as well. In fact, when it comes to trading and investing, the time that you are most objective, right? Because this is a subjective game out here, subjective business. The time you are most objective is before you've entered the trade. That's why you want to make sure you have a bracketed order. You want to make sure when you enter the trade that you've got a target in mind. However you come up with that, I'll show you some different systems that we can use to identify targets. You most certainly need to have a stop in place because you want to be able to live, to play this game forever and ever and ever. And you want to be able to teach this to your children. Rule number 2, always be clear about what it is that you really want and why you really want it. You know, we have to have what are called strong reasons why if we truly want something. If you don't have strong reasons why, you're just simply not going to, you don't have any impetus, you don't have any real motivation to move you forward. We've got to be clear about our outcomes. Now, that's what I love about pattern recognition, Fibonacci relationships, swing points, because they help us to be clear about our outcome. And even more important, these tools help us to measure our outcome. You see, if you can measure something and it's all down on paper, making a decision is thousands of times easier. So the key to following through on any decision is the why. It always has been, it always will be, always will. Make sure that you have your strong reasons why. Now, they could be patterns out there, right? If you know the expectancy of your trading system, and we'll talk about that during the next couple of hours, if you know the expectancy of your trading system, all that means, does it have a positive outcome over a series of trades? Because trading is like a business. It doesn't mean your last trade. It doesn't mean your last 10 trades. It means over the period of a year. You've got to run a business. Rule number 3, remember that decisions are based upon what? All decisions in life, they're based upon probability. And what we want, you know, is to become a master of probability. It's like my newsletter service. It's called Mastering Probability. It's that for a reason. You know, we never wait for total absolute certainty. If you're waiting for total absolute certainty, you're looking for perfection. It doesn't exist, or rarely do we ever get it out there. Decisions, folks, are always made upon probability. Number 4, remember that decision-making is nothing more than value clarification. What I mean by this is that many times it's hard to make a decision because we just don't have one outcome. Instead, we've got a series of outcomes, and And many of those outcomes we're trying to attain somewhat simultaneously. So we go through this value clarification system. We understand that there's different outcomes that we want. As you know, if you listen to this show, we talk about Gartley buy, Gartley sell patterns. 5 outcomes. So simultaneously, there are 5 outcomes that we have to take a look at out there. We'll take a look at some of that today. So 4 rules of decision making. Write this down. All important or difficult decisions must be made on paper. Be clear about what it is that you really want and why you really want it. Remember that decisions are based upon probability. Don't wait for absolute certainty. And remember that all decision making is nothing more than value clarification. And I do value you being here with us today. Right now, Dow futures, they're down 9 points, trading out at 16,170. S&P futures, they're relatively flat, down a quarter, trading out at 1837.75. NASDAQ futures up 5 points, trading out at 35.05. King dollar back getting whacked here this morning off 44 cents, trading out at 79.92 out here. So we've got a lot of movement in the currency market. That means we got to look at the euro, we got to look at the yen, we got to look at the pound out there. If we take a look at Goldilocks, we've got gold up $13, trading out at $13.11. Silver's up 18 cents, trading out at $20.09. So with the U.S. dollar index, we'll go take a look at the gold chart. We'll put the U.S. dollar index. We'll overlay the U.S. dollar index on the commodity. See, and so the move of $13. What I'm saying is, we'll see. Is that really a big move with the U.S. dollar index back 435 ticks right now? I don't know the answer. We're going to go take a look at it. Light sweet crude, it's back 71 or up 71 cents, I should say. It's trading out at 101.16. A quick peek around the globe over in Europe right now. We've got the DAX. What used to be on my screen. Where the heck did it go? Oh, I'll be a son of a gun. What the heck happened in my system here? Oh, well, the DAX looks like it's down 9 points, but I've got no idea what happened with the FTSE, the Nikkei, the Hang Seng, and the Shanghai. My apologies, folks. I don't think it'll be easy for me to get to that here during the day, and anyway, or during the morning session. Let's go take a look at the ES Mini out here. Let's take a look at what it's doing as we speak right now. So trading out at 1838. If you're watching this on TigerTV, you can see this huge sideways consolidation pattern that the S&P futures have been traveling in. The bottom of the consolidation really taking place back here, probably around the October 21st, 2013. So yeah, we've been in a consolidation pattern since October of 2013. Now, the ES Mini broke out of that consolidation. It has broken out of that area twice. 3 times, really. Once, twice, 3 times. Back inside that. Now, where is support inside of the ES Mini? If we take a look at support, you had a nice bullish engulfing candle session from March the 17th. That low, 1823.50. So that is about, 15 points away. That's an area that's going to be critical to watch, because if, in fact, we are to see a close below 1823.50 on a daily basis on the ES Mini, it really opens up the likelihood that price travels all the way back down to the bottom of the consolidation level. The bottom of the consolidation level takes us all the way back into the February 5th time frame, right around the 1732 mark. Now, does it have to get down there? No. Remember, you have multiple outcomes on any type of a trade setup out here. And what you want to do is you just simply want to take a look at one of those tools that we use to identify price. We use the A to B equals CD tool. Well, inside the ES Mini, there is no A to B equals CD that we can use out here. It's in a consolidating pattern. Oh, so the only tool that the best tools that we have that we can use to try to identify price targets out here. Well, number one, we always need to know where is it that the bulls are hanging out. This is a battle between the bulls and the bears. That's why we use Japanese candlestick charting to be able to identify that. So we already know that 1823.50 level, that's going to be key. If we now go if that level's broken, now we want to take a look at other possible targets. So, and we know that one of the possible targets here is the bottom of the consolidation range. So we've identified 2 possible areas here for the ES Mini to travel to. Where's another area? Well, now we're just going to take a look at those retracement levels, going from our swing point low, that little doji candle back on February 5th, all the way to the high that was put in here on Jobs Friday out at 1892.50. So you can see price right now has traveled back into the 0.382 retracement. Quite strong with regard to the S&P futures versus when we go take a look at the NASDAQ and see what they're doing out here. Only have been a dead cat bounce. This 0.382 level, which is 1831.19, has been a decent support level. That doesn't mean it doesn't spike down the ES Mini and tag the 1823.50 level. and then close back above 1831. But this is so the move down here in the S&P thus far has been really relatively muted out here. In fact, if you were looking to buy something that you wanted to pull back, you'd like it to pull back to where? That's right, that next level, 0.618, the 62% retracement level. Well, inside the ES Mini, that's 1793 and change out there, 1793 and a quarter as where that pullback would be. So we need to be taking a look at volume. But here's the problem. The problem that I see is there's really no base that was built inside the ES Mini on the way up from that February 5th low. So there's no swing points. There's no junior swing points in here. And chances are, if in fact, the likely outcome, in my opinion, is that if you break below that the bullish engulfing candle from March 17th, you are more likely to move down to that 1732 level. But we'll take things one moment at a time out here. If we go and take a look at the NASDAQ futures, that's a whole different story out here. NASDAQ futures, we're talking about the February 5th area. NASDAQ futures have almost traded down into that range. That range, the top of the February 5th session, 3463.25. There were 325,000 contracts at that low. Yesterday you were moving down with 370,000 contracts, so it's moving down with volume. It has, if we take a look at, so this pattern here, this Gartley buy, this is a 0.618 Gartley buy pattern. This failed. That failed, makes that when that level fails, that says it goes to where? The 0.786 area. And where has it really traveled to as we speak right now? Because the 0.786 retracement is 34.82. You're trading at 35.04. Yesterday's low out here, 34.74. I'll get it right. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Right now, I can see the DAX is off 93 points out here. In any event, let's go back to the NASDAQ futures. Now, during the breakout here, what I was able to do is draw in a potential 3 drive to a bottom pattern that may be forming inside of the NASDAQ. Now, we really want to be paying attention to the NASDAQ. NASDAQ futures is what I would prefer to look at because, we've got something that's trading for the majority of the day out here all night, and so we don't have a void of price, and therefore pattern recognition is a whole lot easier. Plus, we can take a look at what took place in the overnight session, what the bars look like before the actual cash market opens, so just a whole lot more information out here. And there's a number of patterns that will show up inside of the futures contract that will not show up inside of the cash index. I'm pretty sure we can go to the Qs and I won't be able to find this pattern out here. Now, this is a 3 drive to a bottom pattern. So what do we know about the NASDAQ? Number one, we know where there's some good support out here. That support being the Uncle Ben Bernanke day of December the 18th. And that low is 34.15 out there. Nice big. That's when everybody, not everybody, but many people were expecting the world to cave in. And it certainly did not cave. Put in a nice bottom. That level was tested here. Big bullish engulfing candle. That level was that was tested back here on February the 5th. A nice big reversal signal that took place obviously on February 6th as well. So the low here of about 34.12 would be a likely target. However, in fact, on the way down, right at about the 34.53 level, what we have there is what would set up a 3rd drive. And beautiful Fibonacci numbers. Now, pattern recognition is about being able to identify and see the pattern ahead of time. And then it's waiting for price to get there. Just because price gets there, in my opinion, doesn't mean you pull the trigger. Because you want to see the cavalry rush in there. Because price can just simply blow through that. It can say, I don't care about your stinking patterns out there. However, we want to be aware of if price reverses in that range. We want to understand that that is a significant pattern. Likewise, if price stops there and it fails, that's also sending a significant message to us. So we learn a ton. We learn more from failure than we typically do from success out here, but I want you to be a successful trader. So as price is coming back in what a 3 drive to a top or a bottom pattern, you're looking for, these are not patterns to be forced out here. You're looking for consistent Fibonacci expansions of swing points. You are looking for this to be symmetrical. So you want this symmetrical both from the Fibonacci standpoint as well as from the time standpoint. So a number of different ways that you can do this. I'll get rid of the pattern that I drew out here. And visually, this just simply stuck out at me. And what I mean by that is I took a look at this first candle session down here from March the 17th. I looked at the next low that was down here. This came in on March 27th. And I could see that it looked like from a time standpoint, we're pretty darn close. So I have this little cycle tool that I've got on my system. I can start at that swing point, which was from March 17th, move that over into the March 27 time frame. And from a cycle standpoint, it says, hey, guess what? Today or tomorrow, April the 9th to be exact. So it could be today, could be this evening, could be the close, could be intercession. That would meet us on time. Then the next thing that I did out here, so I know we're right on the time standpoint. You can count the bars if you'd like. The next thing that I did, I just went from my Fibonacci low to the high during that session, meaning the low of March 17th all the way to the high that was put in here on March 21st. And lo and behold, at the 1.618 retracement, 35, 33, 50 out here, and it got down to 35, 35 and a quarter. I'm like, wow, that's pretty good. Okay, so now I know I've got something in a time sequence in the first to the second drive out there, 1.618 expansion. So now all I'm doing is I'm just taking the next 1.618 expansion. That is from the March 27th level to the high that was put in here on April the 3rd, and that's what gives you that price target of around the 34.53 range inside of the NASDAQ. Does that mean that that pattern has to hit or hold? No, it doesn't mean that, but it does mean a 3 drive to a bottom pattern. Very important out here, so that's what we're going to be looking for. That's what I'm going to be looking for. I think that's what you should be looking for as well out there. Now, whether price gets down there or not, I don't know. Why? Because at this stage here, price has been pushing lower on less relative strength. In fact, we actually have some synergy here across the markets. Across the markets, if we now take a look at the Dow, which has been the strong hands on the way down here. What we're seeing that is trying to form here during this session right now that we're in right now, that's going to end at 10 o'clock this morning, so we've got another 31 minutes out here. What we do have is we have price moving lower on less relative strength out here. So if when the doors open in less than a minute out here, if they release the hounds, and the hounds decide not to run south, what we ought to see is the Dow run into, we're looking at the Dow futures, right around 16,211 is going to be a resistance point. If it gets up and over that, guess what? Probably that 3 drive to a top or 3 drive to a bottom pattern doesn't pan out, or at least doesn't pan out today. Could pan out tomorrow, though. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow trading off 8 points right now. S&P up 1. Composite up 14 points. Russell 2000 up 2. Apple up $1.35. Microsoft back 4 ticks. Google up $10 and change. Netflix up $6 right now. Alkermes, ALKS is up 360. Baidu up 349. YY Inc. up 265. Ctrip.com up $2.10. LinkedIn up $3 to the downside. Gigamon, GIMO off 25% out here. Looks like they maybe missed their revenues, probably their bottom line as well. We've got Spectranetics, SPNC as a Turkish symbol. They're off 13% this morning, down $3. Cornerstone, CSOD up about 6%. Questcor Pharmaceuticals, QCor, off about 2.5% this morning. Activist, ACT, down about $1.48. Our call number 877-927-6648. So before we went to break, I mentioned, I said, okay, so what we've got going on here is we've got a little bit of synergy with regard to the markets. I had punched up the Dow futures. The 120-minute time frame was what we were looking at. That 120-minute time frame giving us a potential signal of a little bottom, a little bounce area that is forming inside of the markets. And what that was is that's where price is moving lower. We talked about this yesterday. And the screen that I've got up on my chart here is the screen of the NASDAQ 120-minute futures contract. And yesterday, that pattern began to form at 10 o'clock. However, by 12 noon, that pattern was completely negated because there was no follow-through. We had the nice bullish engulfing candle, but you always like to have a second opinion. I believe you want to have a second opinion out there. What that means to me in trading out there, that means wait one more ping, Vasily. Means wait one more bar. Make sure that the trade is truly working or moving in the direction that you are looking at. And that bullish engulfing candle that took place at 10 o'clock, totally erased. Now, what do we have take place here overnight? Well, at the 4 o'clock session, no bullish candle, but again, we saw price moving lower on less weakness, I guess is the best way to do it, because the relative strength indicator was at a higher low than when the anchor area was actually formed. And that anchor area, the lowest relative strength reading that took place here during this oversold level that we're in, that took place here at the close, and that was back on April the 4th out here. So a little hammer candle that took place overnight. You kind of have to put those off to the side because trading is so light and the bars are so small that you really don't pay much attention. However, this session is a whole different thing. So at 9:37. here we are again with the market trying to bounce. We've got that price relative strength, the divergent pattern. We've got price trying to trade above and close above 35.10.47. What this means to me is to make sure that you've got your stops tightened up on the way down. It means if you're not in a short position and you want to get into a short position, it means just wait for the market to bounce. We can go take a look at different target areas to be paying attention to out here. So you've got the first sign here in the week link, which is the NASDAQ on the 120-minute time frame. And again, at 10 o'clock, if we get it close above 35.10.70, 35.10, let's just call it 35.11. We get it close above 35.11. It's going to be our first indication of a bounce. And we'll go take a look at, and you want to see follow through on that next session. We don't want to see look, I don't know whether you want to what you want to see or you don't want to see. If you are bearish, heck, you want to see it fail. If you're bullish, you want to see this thing. You want to see this little bottoming pattern come in here. So now let's go take a look at what I mentioned synergy. So I'm just going to flip back and forth here because what we didn't have yesterday was we didn't have what I'll call synergy. We only had the NASDAQ and the Russell 2000 that had this pattern. Now what we have here, which is really important, which I think is really cool, is we've got the Dow futures that also had that same pattern. That also had that price relative strength divergent pattern out here. That's important now. Now that's important because right now we don't have a confirmation on the strong index out here. And what I mean is we had price move to a lower low on less relative weakness. If we take a look at the RSI reading, that's taking place right here at 4 o'clock yesterday afternoon. The RSI reading, I got to put up my data box here. That would make it a little bit easier for me to do. So I'll put that right there. You can actually follow along with me. So the reading here was at 17.49. You can see as it was making a lower low here as we came in at 8 o'clock this morning, 21.99. So price pushed lower, and it was done with a higher relative strength they're reading out there. Now what we're getting is the potential bullish reversal signal. Any close above the open of the 8 o'clock session at 16,175, that would give you a bullish engulfing candle out here. Now, what does the Dow need to do in order to confirm, because this is the strong index out here, that this bounce is really a bounce that's underway? I say, number one, you've got to form the bullish candle down here at the lows, or certainly, ideally coming in before 10 o'clock here. And then number two, you need to see a close above 16,213. If you see that out here, now we're talking about a bounce. And how likely is it to see some type of rally attempt out here? Real likely. Why? Because we had a one-day rate of change in the VIX index yesterday of greater than 10%. I think it was 11.23% or something like that when it was all said and done. And what if you've been listening on this radio show specifically, I've done the analysis of taking a look at the VIX index since it was created, and have gone back and I've plotted every single rate of change in excess of 10% and come up with a probability, because all this is mastering probability of how often there is a bounce in the market within a 48-hour session. And that answer is it's about 65%. Since the November 2012 lows out here, it's even higher than that. Now, that's just simply a bounce, a counter trend rally is what it can be. Sometimes it's more than that, but in this case here, I don't think that it's more than. I don't think it's a significant bottom here that will be forming. But we're going to take things. We're going to take the information one moment at a time, one day at a time. So we're going to be watching the Dow futures here to see what this pattern actually does out here, and that's that price relative strength pattern. So we took a look at the ES Mini. No, we did take a look at the ES Mini. I don't recall if it's on the S&P futures contract or not, but let's put that up on the screen. Yeah. So we've even got synergy. So we've got the NASDAQ futures have got this pattern. The S&P futures have this pattern. The Dow has this pattern. What do we need inside the S&P futures? A close above 1843. Right now you've got a bullish engulfing candle, so it looks like that is likely to form, although there's still 19 minutes left in this session out here. A close above 1843 says that price runs up to about 1858 out there. That's where you have to start making a decision. Is that the kind of heat that you want to take on your trade? Do you flip your position? Those are trade your plan your trade type scenarios out here. What I want to be able to do is I want to be able to give you the feedback as to the synergy that we're seeing inside the market. I want to be able to give you the feedback with regard to potential bottoming patterns. Now, that's all on the 120-minute time frame out here. If I switch over and we take a look at the 120-minute time frame for the euro-yen, that's going to be important to us. Well, what does that have forming? Guess what? And we took a look at that yesterday. That is also forming a price relative strength divergent pattern out here. Now, this has not given us any kind of a bullish reversal signal, and you'd want to see that inside this currency pair out here. So that would require, and it doesn't look like it's going to do that here between the time period of now and the next 18 minutes, but it could. And that would mean you'd like to, that means from a bullish standpoint, a reversal standpoint out here, you're looking at the level of 141.16 as being a very key area to be paying attention to, and that is inside of the Euro-Japanese yen. Now, it could finish off the session about right here, right around the 141.03-ish type level, form a little bit of a doji candle, and that would make it much easier to form a bullish reversal on the very next trading session. So we'll take that. Well, actually, you know what? This is because when currency starts trading, this 120-minute session doesn't actually end till 11 o'clock. So this actually does have the time within it to actually form a reversal signal. So you've got real synergy with regard to a bottom that is a bottom from the standpoint of a bounce that is trying to form out here between the currency pair, between the S&P, between the NASDAQ, and between the Dow. So we'll continue to watch this, see how this plays out here. Now, let's go take a look at the other markets that are moving. Let's go take a look at, let me go ahead and put up some other charts out here. Again, I use 3 different tools, all of them, though, being fed by the eSignal platform out here. Let's go take a look at Goldilocks. We'll use a couple of different tools on this and see what's going on. I also want to go ahead and we're going to take a look at light sweet crude, which is up about 68 cents right now. I thought it'd be a good idea to show you, because I've gotten so many questions over the past week with regard to utilizing these different tools. How is it that you place a trade? People hear me talk about the 1%. They hear me talk about system expectancy. You hear me talk about using the average true range to identify your stops out there. So the questions are, how do you put all that together? I think that in light sweet crude, we'll find out it may set up an opportunity for me to actually walk you through that. I'll do that. You know what I'll do? I'll do that during the next show. So if you don't have the opportunity to listen in during the next hour, just go catch the archive of that show on Channel 10. But that's what I'll do. We'll have enough time to do that. In the case of Goldilocks right now, you've got gold trading out at 13.10. It's moving up towards its point of control area. Right now, one of the indicators that I have on my system here, I've got the TAS signal box indicators. You can see the what's referred to as the resistance or the unfair high level. That's at about 13.69. The low here, the unfair low level, the support area, that's really at the 12.28. And then you've got the area where you have the so-called point of control, the resting spot, where the largest number of orders are being placed out here. And it's right in between, I'd say, the 13.22.24 to 13.33 level, and that is in Goldilocks. So it's really kind of in limbo land here as we take a look at the daily chart. If I take a look at the intraday chart for gold, we can see that on the intraday chart. It looks like, what's doing on the intraday chart here, it's running right into resistance. Let me try to blow this up on the screen here so you can see there's a new unfair high level that's been attained. That was just posted here just as we came on the air, 13.14. So that's really your resistance level. If, in fact, gold can get above 13.14, what we ought to see it do, let me try to shorten this up here. What we ought to see it do, there we go, is go ahead and complete at least a 1-to-1 A to B equals CD to the upside. The A to B equals CD pattern, these are great tools for being able to project price, and that's really what you want to be able to do. Now, in the case of this, I've got the A point. You can see it's already on my screen here. It's already measured out. So the A point is the low that I'm using. This is coming in at 8 o'clock in the morning on April the 3rd. The price there was $12.81.90. My B point on this is the session that took us to 10 o'clock in the morning. Again, this is a 120-minute chart that we're looking at, and that was on April the 4th. And that price level was 13.07. Now, you'll see a blue line going across my screen there. That's the swing point. And that swing point had volume of, about 27,000 contracts. That was at the 10 o'clock session on April the 4th. Now, what gold has done is it's busted through that area. It's busted through the B point on lighter volume. It did that here at the 2 o'clock session, 2 o'clock in the morning. Is that 2 o'clock? Yeah, 2 o'clock in the morning. It did that with obviously extremely light volume. But you can see here's the volume bar on the bottom of my screen here. Nonetheless, you're up above a B point. It's up against this resistance area, this TAS signal box on the 120-minute time frame out here. If it can get above 13.1470, that sets up your 1-to-1 A to B equals CD price projection of 13.21. In this case here, the retracement, the B to C retracement here, only about 45%. So between a 0.382, between a 0.618, says it should have a bunch of energy. It would say to me that if it can get above this 13.14 level, what Goldilocks ought to do is actually move up to about the 13.28 range here. But right now, it's bumped its head up into a resistance point. So that's what's going on inside of gold. If we take a look at silver out here, silver right now, it's trading up 17 cents. Silver really, if we take a look at the daily chart, just simply in that area, that little point of control area, you can see here on the daily chart, really ever since the time frame of March the 25th, take a look at that light blue line, horizontal line going across my screen. It's at the price of $20. How that has just simply acted as a magnet. In the case of silver, it should have pretty decent resistance at 1936 if it could get down there. Not to say that it's going to. If it can truly break above this little point of control area, it ought to move up to about 21.28, and then actually could run into 22.56 out here. That's what's going on as we take a look at silver. Let's go take a look at some of the stocks here that are popping and dropping. Let's go take a look at, give me a moment here to switch tabs, which will make it much easier for me. So to the downside, we've got Gigamon. So let's go take a look at Gigamon, see what it is doing. The ticker symbol here is GIMO. Right now we got a flat market, so no reason for us to be focused on the index. I think we've covered that pretty well. In the case of Gigamon, man, down with some big volume out here. Not the first time. Looks like there may have been some volume off the top. Yeah, okay, so here's an IPO. Let's take a look at expansion points. Let's take a look at A to B equals CD down pattern. So there's not anybody that's inside this equity. If you're a holder of this equity, other than maybe the person who bought 2 minutes ago or so because of a 4 or 5 cent bounce, is actually in the money on this thing. So that's a bummer out here. But this thing had an IPO date on June the 12th, went from 2302 up to 2847. When we get back, we'll go take a look at the different patterns out here. Looks like 1791 is where it's headed to. That may form a little butterfly pattern. That is on Gigamon. Unfortunately, too much volume today. Dow is off 7, S&P up 70 cents. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, and it is always better when we're together. Thanks so much for joining me. Right now, the Dow is off 33 points. S&P is down 1. NASDAQ Composite still slightly green, up 3 points. Russell 2000 up 3. New York Stock Exchange up 4. Before we went to that break, we were taking a look at the Gigamon. The ticker symbol out here is GIMO. Just simply getting crushed here this morning. Now, we just took a look at a Fibonacci expansion of its IPO date, the low out here of 2302 up to the high that was put in on September 19th out at 4181. Talk about a haircut. So that's your 1.272 expansion. If we take a look at A to B equals CD to the downside here, you'd use that September 19th high at 4101. You would use as your B point down here on December 16th. That's at a price level of 2519. The C point is this retracement up here on March the 20th. You can see this thing gapping down, today. Big with volume behind the move here, gapping down as it's forming the D point. That says that from an A to B equals CD pattern, it wants lower price. What's that lower price? Well, $15.57. So between $15.57 and you'd have to say the point 1.618, about $17.91 to $15.60. I'd have to say more likely the $15.66. But this thing, no reason for it to not head down to $11 or so. In any event, let's go back to gold. I wanted to do this here. During the break, what I was doing is I was overlaying the chart. If you're watching us on Tiger TV, the red lines here are the U.S. dollar index. So the U.S. dollar index, now I've inverted it. So if the U.S. dollar index is getting weaker, it's actually rising, right? No, the reason is because I'm trying to correlate the U.S. dollar index to gold. If the U.S. dollar index is getting weaker, you expect the commodity to move up. So I want to have that correlation so that we take a look at it to see if this thing is doing the tango. Does the commodity, is gold paying attention to what's going on with the U.S. dollar index? Now, the other thing I want to really point out to you is taking a look at where the U.S. dollar index has really pulled back here this morning, down 44 cents, trading out at 79.91. But if I come from its swing point, just to take a look at the type of retracement, so in this case here it would be its pullback, right? But if we take a look at coming from the, we'll use the same swing point inside, and the answer is yes, this thing is correlated, at least as we speak here right now. If we take a look at the retracement where it's at, it's a little bit above the 0.618 retracement. That's the U.S. dollar index that I'm taking a look at. However, if we take a look at the retracement out here off of the high inside of gold from that same time period, March the 17th, 17th down to the low out here. You'll see it hasn't even made the 0.382 level, which is 13.21. So it just makes it somewhat suspect out here, knowing that we've got this correlation that is going on now. Does that mean that gold can't move higher with the correlation of what's going on inside the U.S. dollar index? Well, of course it can move higher. What's going on inside the U.S. dollar index here? Let's go take a look at it this morning. Let me refresh my screen out here. So it's trading out at 79.92 basically. And if we take a look at where is this thing going to find support, it's trading into the session out here. So we've already identified, right, the retracement here. Let's go take a look at the actual retracement right to the 0.618 level. That is at 79.85. But it's come back there with a wide-ranging bar as we speak here right now. Volume-wise, number of contracts, 14, almost 15,000 contracts to the downside versus going up against 25,000. That big old nice reversal session, big old bearish engulfing candle from March the 19th, though, would say to me we're likely to see a pullback in the U.S. dollar index, maybe to the 79.59 low, maybe to the actual breakout low, which would be the low of March 19th, about 79.49 out here. And if that's the case, that would say that we should expect to see gold and silver actually move higher out here. But if it's just moving higher, just if the real fuel here happens to be the U.S. dollar index, and it's hardly moving, it's got to make you say, something to think about. Folks, it is a terrific Tuesday. Thanks so much for joining me. Have a great Tuesday. Look forward to seeing you bright and early tomorrow morning, or perhaps during the Money Masters show in about 8 to 10 minutes. Thanks, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.